Welcome back to Market on Close. I'm Sam Bartas on the floor of the New York Stock Exchange, and I'm pleased to say I'm joined by Peter Tuchman, who is the senior floor broker at TradeMass. Thank you so much for joining me. Peter, what did you make of the day? I mean, we can still claim that it was a record, but it just didn't end like one.
You know what, look, I mean, a little bit of red on the screen, look, we've had maybe 4 days that have been the slightest bit of a shallow sell-off, if you'd call it that, over the last months, right? Every day we're hitting record highs across the board. I mean, today we hit a record high in gold, in Bitcoin, in so many different things where people are putting their money. And if we didn't close at record highs across the other indices, we were surely close enough.
Okay.
So I'm not impressed in any kind of a way that, I'm surprised that we haven't had any pullbacks, but every one of them has been so shallow. And, that speaks to the fact that government shutdown, market does not care. Any of these things, fear about interest rate cuts, nobody really cares. At this point, there's enough money on the sidelines. There's been enough of a solid earnings last quarter that, we're in the beginning of the fourth quarter. A lot of big, fresh money coming in.
Yeah. Okay, so the everything rally hit the pause button today. I mean, some things were still up, as you mentioned, gold, but we've seen a bit of a pullback, as you say. But what would you attribute that to? I mean, it's just some profit taking, some money coming off the table. How much of this are you giving to the AI story, this information report we got out about Oracle? You've had some chip names under pressure today with the U.S. House Select Committee on China coming out with some alarming new numbers as well. I mean, what are you putting it down to? Is it just a confluence of factors?
No, look, if you look at the S&P 500 down 25 handles, the Dow off how many points? 90? I mean, this is a nothing burger at most.
Okay.
If they were concerned about any of the things you described, and they probably should be, then there would be a way more of a sell initiative on the floor, because we are trading at record highs.
Yes.
We have had 33 record closes in 2025. This market has had everything thrown at it this year, yet it still trades at these wild, great valuations across the board, and every sector as well. So, for every story that you just described, whether it's the Oracle story, we could offset that by that amazing day that Oracle talked about, putting $600 billion into the AI space and data centers and whatnot. It was up 100 points.
Right.
So one day and one little tidbit of news does not make a market, or does not really curate the way a stock is going to trade. You would notice it with advances versus declines. If we were like 7, 8 to 1, and the market was down 2, 3, 4, 500 points, then I would say the market's engaging the news you described as something that's starting to fracture the market. But I don't see that happening.
Sure. I mean, there's a counter story to everything, as you mentioned. I mean, AMD continued to have a good day today off the back of that tailwind from OpenAI.
Amazing story.
Right. So that's telling us a lot about this AI narrative. So what's next? What are you watching?
Look, it's amazing to think of what is next, right? I mean, we are in the midst of a government shutdown. Historically, the market would have engaged that in a negative way. It's not.
Yeah.
Now, what's next would be is if this government shutdown stays shut for more than 2 or 3 weeks. We know that, even Bessent, right, the president's advisor, said that if, in fact, this continues for as much as 3 weeks, it will have as much as a 1% effect on GDP. That's big. Right?
Yeah.
Think about how we react to a 0.1% move, in some of the numbers that come in sometimes, whether it's unemployment, whether it's CPI, PPI, any of these economic data numbers that come in. When we see a 0.1% move, market tends to react in a big way. So can you imagine a full 1% effect on GDP over that? That would be big.
Right.
So I'm kind of curious why it's not engaging it. The bottom line is there are plenty of reasons. Look, markets are forward-looking, right? We are in the midst of the fourth quarter. Seasonality is not playing a role in this market at all. It didn't for August, didn't for September. We forged and ended both of those months really strong. We are now in the midst of a interest rate cutting cycle, right? We've announced that we've got one cut, probably 2 more by year's end, right? Historically, when you're in the midst of that and it lasts for as much as a year, historically markets have been up 16% by the end of that cycle. So that's at least a little bit of light at the end of the tunnel. But, the market it's baffling in a way to think, everyone's fear is when it trades at such high levels for so long, what's the next move going to be?
Yeah.
We do know that, every pullback sell-off crash that we've ever had historically, before that happened, we were trading at record highs.
Right.
Massive crashes didn't happen when we were, in a weak market mode. They were at record highs. So, there are probably people who are thinking that this is a little bit inflated, that the market can't sustain these levels for that long.
Right.
But the story continues to be strong. The AI story, that's a revolution. Billions and billions and trillions of dollars are being put in by the Googles, by the Metas, by the Oracles, by the Microsoft into that space. CEO of SoftBank the other day actually said that NVIDIA, which we know in 2023 was a $108 stock, 2024 was a $900 stock, it got as high as $1,200, split 10 for 1, is trading at 180 post-split, and he believes that NVIDIA is still an undervalued company, gauging from the demand that's going to be over the next 5 years for chips and data centers and whatnot. So with that, I know we don't want to think that this whole market's being lifted by one sector, and I don't think it is, but it's surely the biggest contributing factor.
Yeah, it's fascinating what Neil Kashkari had to say about some of that today, weighing in on the whole AI story about how the fact that big investments in data centers could actually lead to higher borrowing costs, which is, obviously not what we want to see either. Look, you've got some fairly big calls on the S&P 500 as far as year-end targets. Some are talking about 7,000. I mean, you've got Evercore ISI looking at end 2026 of 7,750, a bull case of 9,000. I mean, what gets us to these sorts of levels, do you think? If you've got some further room for upside as far as some of these
What gets us there is, first of all, once we're in this cycle of lower interest rates, you're going to see a jump start to the housing markets for sure.
Yeah.
And that's going to affect employment. You're going to see the continuation of the AI space. You're going to see the earnings. Earnings have been super strong. In the third quarter, the second quarter we got tossed around because earnings were strong, but the inability to give guidance because of that whole Mr. Trump and the tariff story left us high and dry on the guidance. Third quarter, super strong earnings, 80% of the S&P beat, and we were able to give, because of the deals that they've been making in the back door, with the UK and EU and Japan and all that, we were able to give guidance that was solid. I think, the lifeblood of this market is earnings, right? And if we're able to come back into the fourth quarter with super solid earnings and good guidance, I think that will be a contributing factor. There's still money on the sidelines, apparently as much as $5 trillion that is still underinvested. I think that's been the biggest contributing factor to the shallow pullbacks that we've seen. Normally, when a market trades at these levels, when you have a sell-off, people would jump on board that and say, why don't we take some profits?
Right.
In a market that closed out the third quarter, right, I sort of thought when markets are that strong coming into the end of a quarter, you normally would have profit taking.
Right.
We didn't see that. On the eve of the last day of the third quarter, we had a $4.5 billion buy program that came into the close here. That's a vote of confidence in the market, right? That is money being put to work. As well as the beginning of the fourth quarter, we've seen sizable volumes coming into the NYSE. And so, across the board, I'm always questioning myself, like, what is it that they could throw at the market that would dislocate this rally? And I can't come up with a reason.
Yeah, they step in, they buy the dips, don't they? All right.
And they buy them, they don't even let them get big enough for a real dip.
Exactly.
They're very shallow. All
right, watching those earnings are starting in earnest next week with the banks, the first cab off the rank. Peter, always a pleasure to have you. Thank you so much for your time.